Good morning. Welcome beyond the SEAF model. I'm Jack Kosar. This is effective for the week of August 18th, 2025. Let's get started. SEAF signals for this week. We have KFC, chicken trades, technology, financials, and communication services are our SEAF signals for this week. Financials jumps into the top three with a very strong trading week and a nice positive skew from 9 to 4 to 1. Technology holds on with really strong tactical month, strategic quarter, a little bit of a break on the trading week. And again, communication services holds on as well with tactical month, strategic quarter with some outflows in the trading week. We'll take a look at the rainbow chart in just a minute to see how that is reacting to the outflows on the trading week. Other things to kind of look for, healthcare had a 2 on the trading week, though still buried in the tactical month in the strategic quarter. Healthcare has been a relative underperformer significantly for going back to last year, and we'll take a look at this both on the heat map and the rainbow chart in just a minute. Wanted to bring up my chart that I've been showing as of late, sector total AUM, adding up the 11 sector spiders. You put all their AUMs together. This is what you have on this chart. On the below is just the SPY price chart. What is this telling us? We have a 21-day moving average on this total AUM. As of late, when we see this number kind of drop below the 21-day moving average, we tend to have price depreciation, the S&P 500. And as this mark moves above the 21-day moving average, we tend to have price appreciation in the S&P 500. We had a little bit of a dip below the 21-day moving average. That did not hold. And since that dip, we have been up 3.05% for the S&P 500. We are negotiating a very interesting level here. This is this high here that we hit. This is a high mark for the total AUM of the 11 sector spiders. We touched on it twice going back into November and looks like February of this year. We touched it again in July, failed to make it and came back, and we did surpass it, but we have not really broken through. We are now currently testing that level. Again, is this predictive of what's happening in the future? No, but we tend to see this thing's trend in the right direction and kind of negotiate those support and resistance levels. So currently sitting as a support level. We'll see what happens if we can break through it. Kind of watch this space for next week. Heading into our heat map, what do we see here? Starting to break down. We were starting to get those clumping that I like to see where we have kind of greens all at the top, reds all at the bottom. We are starting to kind of see this thing mix up a little bit. I call it sometimes the Picasso painting as it kind of starts to renegotiate itself. We see communication services, utilities, and industrials all having outflows up here toward the top, meaning that they are being held on by their tactical month and strategic quarter. Some of that accumulation of capital that we've built up over the last couple of weeks and months can sit here in this tactical strategic quarter. That is both an advantage and a disadvantage at times. It is an advantage because there are times where the trading week will blink on and off. We'll take communication services might be taking managers might be taking some profits off the top, or this could be the start of a new trend. We don't know that yet. This is not a predictive model. This is a model that is tracking the asset flows and telling you where they're going and where they're accumulating. So that accumulation can keep you in trades longer for times where there's just these little breaks in the action, or it also starts to point to, is this overall going to be changing the matrix? Are we going to start to see things shift up? Healthcare and consumer discretionary to join up with technology and financials as the accumulation occurs, or is this just a 1 week off? So just kind of highlighting this, diving into the numbers. We were down slightly last week, overall negative 0.149, which is very close to zero, so almost a net change. 3 of the 5 days last week were down in terms of assets coming out of the S&P or out of the 11 sector spiders, so overall a down week on those flows. Financials, 0.31%, not quite hitting the 0.4% that we look for a significant move, and negative 0.34 outflow from communications. Again, not hitting that big 0.4 threshold that we like to see, is being really kind of showing some conviction in terms of how much flows are coming in and out. And again, yeah, technology holding strong with some strong accumulation. This number 3 is actually quite low to 0. We've been seeing this a lot lately, where we have 1 or 2 big flows and everything else floats pretty close to 0. Healthcare 0.15%. Otherwise, a lot of very near 0 flows. Overall, we've only had a few days going back the last 3 months where we've had any major price movements over 1% in the overall sector spiders where money is flowing in or even flowing out. This continues to be a very slow asset flow time. Heading into our rainbow charts. This is financials. Financials kind of shot up here through a void into neutral into favored due to the fact that we don't have a lot of strength up at the top of the SEAF model outside of technology. It did vault itself into the top 3, but we are seeing a little bit of a relative outperformance turnaround here, which appears to be on the support that we got from November and December of last year on the relative outperformance versus SPY chart. So we are picking up a little bit of relative performance here. If we can really continue these strong flows, a couple more weeks in that trading week of 1, get us up on that mid to upper favor, this thing really could take off. But it was nice to see a little bit of a turnaround on financials as flows did come in aggressive. And again, I really do like to see these what I call positive skews in terms of strategic tactical trading, where we're going from 9 to 4 to 1. That is showing some momentum heading into the financials. So that is financials, which is the SEAF signal for this week. Technology, also a SEAF signal, showing some real strength, continued strength in this relative outperformance versus SPY chart. This thing has been straight up since those April lows. We have spent a lot of time in this upper favored. We continue to negotiate it up here. Really strong trend. Seems to be tapering off a little bit compared to this straight up version we had through June and July. But again, technology remains very high ranked, 5 overall. Ranking score 1 to top the chart, top ranked sector, but overall ranking of 5, sitting at upper favored, continues this strong relative outperformance flow. Technology continues to be a place to be. Healthcare. I always like to show these when we start to see some of the sectors at the bottom pop up. Like I said, healthcare 2 on the trading week. Currently, this did bring us in from a deep avoid to a just moderate avoid, I guess, close to that neutral range, but we have not seen any relative performance versus SPY. Some of the times, and that's kind of why I mentioned earlier that we like seeing tactical month and strategic quarter sometimes hold with that accumulation of assets because it prevents the model from getting really whipsawed. Healthcare had a strong number 2 on the trading week, but nothing on the relative performance side. We really need sustained several weeks of these stronger flows in order for this thing really to push forward and really start to affect that relative outperformance. So, as we can see here, we were in a deep void for a bit. It took us generating into neutral, up into favor to really kind of start to pick up at that relative outperformance. Similar thing here, sitting in a void, touching up, going in through neutral, up into favor. That's when we start to generate that really nice relative outperformance versus SPY, and it's just not here yet. So, we can continue to watch this healthcare space. I know it's been underperforming for a long time. I've heard some managers talk about how, at a certain point, healthcare has to turn around. But it reminds me of that saying that the market could stay inconsistent longer than you can say solvent. So, still in a void here for healthcare. Communication services backed off a little bit on the trading week, but we are seeing some nice relative outperformance versus SPY. Still sitting in favor, still a SEAF signal. So, what does that mean? We could have a little bit of a manager sell-off in terms of taking some profits from communication services, which has had a nice steady relative outperformance versus SPY going back to last year. Those flows. A lot of different reasons for a break in the flows, but still holding favored. A continued outflow would bring us in a neutral and a void, which something to be concerned about as of right now. Still favored, and again, watch this space next week. We'll see what communication services is able to do. Last but least this week, energy. Energy remains at the bottom, pretty steady here, kind of trading in a box, but in a downward sloping fashion. Still in that deep avoid. We like to bring up energy every so often. It's similar aspect that to healthcare is that it sits relatively under the S&P 500 for a very long period of time. Some managers calling for different spurts or trying to call the bottom relatively, and it just hasn't happened yet. So we still sit in the deep void for energy. We have these little spurts that kind of come touch in favor, but nothing that's been sustained. Energy continues to be a place to avoid. That is all I have for this week. I look forward to breaking down the SEAF model with you all next week, and thank you.